Can we quickly look at question 8? Can someone read question 8 for us? Question 8. Who is reading for us, please? Are we tired of reading?
In which of the four? Okay, German has a company. German has a number. Germain has a number of relationship with other companies. In which of the following relationships is Germain necessarily the parent company? 1. Fall has 50,000 non-voting and 100,000 voting equity shares in issue, which with each share receiving the same dividend. Germain owns all of Fall's non-voting shares and 40,000 of its voting shares. 2. Keep has 1 million equity shares in issue, of which Germain owns 40%. Germain also owns 100,000 out of 1,000,000 8% convertible loan notes issued by Keep. These loan notes may be converted on the basis of 40 equity shares for each $100 of loan notes, or they may be redeemed in cash at the option of the holder. Germain owns 49% of the equity shares in Poly and 52% of its non-redeemable preference shares. As a result of these instruments, Germain receives variable returns from Poly and has the ability to affect these returns through its power over Poly. So in which of the following relationships is Germain necessarily the parent company?
Okay, thank you. And the correct answer is what? We have different combinations there. We have one that A that says 1 only, B that says 1 and 2 only, C that says 2 and 3 only. Which of them is actually correct? And you have D that says all the 3 are correct.
If I were to choose, I think I'll say C.
C. C says 2 and 3 only. Any other person? Any other person? Some of you are still looking. Or some of you are not even back. I guess some people are still on the break. We are just saying that they are on the call. They've gone to pound yam. Okay. Chinelo, you removed 1, right? You believe
Yes.
1 is not. Paul has 50,000 non-voting and 100,000 voting equity shares in issue, with each share receiving the same dividend. Germain owns all of Paul's non-voting shares, right? And 40,000 of his voting shares. Non-voting shares does not give you the type of power. Remember, one of the 3 things that determines whether you control or not another entity is power over the investee. And what gives you that power is the existing right that gives you the current ability to direct relevant activities. Now, when you own the entire non-voting shares, it doesn't add anything to you. What gives you that power is the amount of voting shares you own. provided you have more than half, it is believed you have that power. But when you look at it, Jermaine has only 40%, which is 40,000 divided by 100,000, which is 40%. So that means one is not correct. But Chinelo, what makes you think that two is correct?
Yeah, I actually said two is correct because it says that he owns about 40%, and he also has a convertible loan notes that can also be converted to equity shares upon redemption.
Okay. These loan notes may be converted on the basis of 40 equity shares for each 100,000 of loan note, or they may be redeemed in cash at the option of the holder, right?
Yes.
They may be redeemed in cash. So, but if they are converted, you believe currently Jamie has 40%.
He already has 40, so upon conversion, it will be more than 50% of the voting rights. So that's why I chose it.
Did you do that calculation to arrive at that?
I didn't do so much, but then again, if someone owns 800,000 out of 1 million and just saying 100 of each loan note is 40 equity share, I think we would amount to that because we just need 10% extra to be on the minimum requirement. But I didn't do the calculation anyways.
So
it was just
it owns 800,000 out of the 1 million, right?
Yes.
And if all of them, both Jaminda owns 80% of that 1 million bond, and the other people, if they convert, you believe that the number of shares that will be given then
will be more.
So what is the basis of conversion? 100, how many shares? 40, right?
Yeah, 40 equity share for 100.
If all of them convert 100 million, 1 million, divided by 100 times 40, the additional shares will be 400 in that case, right?
Yes.
If you divide it by 100, you multiply by 40. The additional shares, potential ordinary share, will be 400. If that is added to 1 million, that gives you 1.4 million. Currently, this guy has 40%, which is of the existing share, which is 400,000. So eventually, if he converts his 800 divided by 100 times 40, that will give it additional 320. If that 320 is added to the 400 he has, that will take his share to 720,000. If you now divide that 720 by 1.4, that takes you to what? I think that should take you to
70,
about
50 some.
51.
If you divide that by 1.4,
yeah,
that's 51% approximately.
yeah.
So that means two, like you said, two. But you should do that calculation. Chinelo, everybody, do that calculation before you conclude.
Okay.
Yeah, because it's
In the
close.
solution I will send to you, I won't be able to do the work now because I can see this time is ticking faster than I can imagine. So do that calculation before you conclude. Don't just use your eyes or head to think about it. Okay, so that number 2 is fine. Then let's look at number 3. Jermaine owns 49% of the equity share in Poly and 52% of the non-redeemable preference share. Non-redeemable means irredeemable, right? Which is an equity component. As a result of this investment, Jermaine received variable return from Poly and has the ability to affect this return through the power over Poly. Yeah, even though he doesn't have more than half of the equity share, but it has more than half of another equity share, which is irredeemable preference shares. So you can conclude that this guy has control in the case of the third one. So 2 and 3 are correct, which is option C. Like I've said in the solution I will send to you, that analysis that gives us that 51%, I will do it. Let me now pause here. I don't know what gave me the impression that I will solve the 27 questions. I will draw whatever I've said before. I won't be able to solve it unless I'm not going to do practice question. Now I've done 8. 8 out of what? Out of 27. You recall I mentioned at the beginning of the class that this 27 consists of 12 questions fresh. That is question 1 to 12, which are all ACCA questions. And the question in the study test that we solved in the class that we could not finish, we solved 1 to 5. I now asked you guys to do 6 to 20 on group accounts, but only 2 people did it. I know you've asked me for solution. I promise that I will make it. Don't worry.
You are holding the solution.
I was holding it because of today, thinking that I will be able to do this. Now that it's obvious I won't be able to do it. So from this question 8 up to question 27, I will send you the Excel today by God's grace, immediately after the class. And you will see all the solutions there. Not just ABC, where you have the need to do any working. You will see all the working notes there. Is that fine with everyone? Is that fine? You will
Yes,
see,
sir. Thank you, sir.
Thank you.
So you will see the solution up to that question 27. But when you get it, you know my advice to you. Don't be like those people that will put the question on the left hand and they'll put the solution on the right hand. They will not look at the question, they will be looking at the solution. No. Attempt from question. Okay, you guys have, some of you have attempted the other one before. Just use it to mark yourself. The other one start from question. So the first 12, they're from question 13. If you look at that question 13 here, question 13 here, it was the question 6 in that study test. It was the question 6. This catfish, it was question 6. So from this question 13 to 27, they represent the remaining 15 questions that you have in the study test. So if you have done it before, just use whatever solution I'm going to send for question 13 to 27 to mark yourself. I believe that is quite clear, right? Okay.
Yes, sir.
Let me ask you, before we move to the practice question, the ACCA computer-based exam platform, which is called TestRich, how many of you have actually how many of you have attempted questions on that platform? Or how many of you have taken your questions to that platform to attempt? Okay, how many people have not done it? It appears all of you have done it. How many people have not used that platform? How many people in the class? Okay. I've asked the same question in different ways now. It appears all of you are very familiar with that platform. You are used to it. You are used to it. You are pretty much. You did mock. You did Ivy League mock, right? Hello? You are not answering. Can you guys hear me? Am I still in the class?
Yes, you are.
But you are not responding. How many of you did the mock? Anybody who did the mock? Nobody in this class did FR mock. Is it safe to say that nobody in this class did the FR mock?
You know, the mid, do I call it mid semester mock, the one we did earlier. After I did all the stress of, answering it and, saving it as a PDF copy. I sent it to the email address that Ivy League said we should send it. That email bounced back like several times. So that is why, apart from the fact that there was no time this time, I didn't even bother to. I just used my Kaplan and BPP question pack to practice, so I didn't attempt it for me.
But again, no, you should have, when they bounce back, you should have told them, you should have told the school that the email they gave to you bounced back.
I did.
Okay, how many of you have, this is what is it called now? This is FR, right? On the test rich. This is test rich. I'm ACCA computer-based exam platform that I'm showing you, right? I'm sure you see it. Can you see it from your end?
Yeah.
All these questions, how many of you have come to attempt to them? How many of you have come to attempt question here? That's exam library.
I have attempted some questions here.
I have, sir.
Yeah,
It's
from
very,
time to time.
it's very important to, because this is like how the exam this thing will look like. The more questions you practice on this platform, the better for you, right? I'm sure you know that. You know, it's not just about, many people cannot even pass this paper, not because they are not good, but because they are not used to this platform. Something that you are used to, will be doing it fantastically well. So you have all the narratives here. I don't want to read all this. In case anybody has not done it before, the same way I logged in is the way you will log in. I'm able to log in because I'm an ACCA member. You can see my name there, right? I'm a fellow of ACCA, right? So because I have number like you, but my own number is a membership number. Don't worry, it's the same number. So you read all this in case you are, in fact, it would be dangerous for anybody not to have been coming here to practice questions. It's in this thing they talk. Yes. I want to go as if I want to. So you see section A, 2 questions worth 50 marks in total. Section B, 2 questions each worth 25 marks, 50 marks in total. Then, sorry, error. Did you see the error?
Mm.
And you did not tell me all along. I opened a wrong one. I opened a wrong one. Putting this thing they talk now. I've navigated through everything. I don't understand what this thing say you. Whoever understand the language, tell me. Ah. Haven't
So
I
is there
built the
left,
entire?
right? And there's no left, right.
This thing does
Yes,
this thing.
And you have to view the entire screen. So
Screen, exactly. You need to
go
scroll up,
left, right,
scroll
up,
down.
down, everywhere.
I've
Yes.
built everything now. There is no other place I'm not because they want you guys to read it. Ah, wow.
Hmm.
Anyway, if you guys say you've been here, I think that is the most important thing. There is no point wasting time here. So there's no point. You must have seen that you cannot insert row, you cannot insert column. All those things I've told you. So those are just the things I wanted to let you know. So I'm not going to waste time on this. Let's go to the more you go there to solve questions, the better. That is just what I was trying to establish. That we all know how to go there. We've been going there. We've been solving questions. Although even though I've been solving questions on Excel. So I have two practice questions here. I have this one, which is there in the handout. And I have another one here. I can only solve one of them. I can only solve one of them. Which one do you think I should solve? Because of time. You all have the two questions, right? This one has to do with question 2 is only P or L, but they want us to determine carrying amount of investment in associate. This one has to do with P or L and SFP, right? This polyester.
So let's
I
do
guess
the
I
one
should.
that has POL and FSP, so that is comprehensive.
Okay, let's do that. Let someone read this question for us. We have to be fast. Let someone read it. Who is helping us to read? People don't like to read. That is my problem.
On 1st April. On April 1st, 2013, Polestar acquired 75% of the equity share capital of Southstar. Southstar had been experiencing difficult trading conditions and making significant losses. In allowing for Southstar's difficulty, Polestar made an immediate cash payment of only 1.50 per share. In addition, Polestar will pay a further amount in cash on 30th September 2014 if Southstar returns to profitability by that date. The value of this contingent consideration at the date of acquisition was estimated to be $1.8 million, but as at 30th September 2013, in light of the continuing losses, its value was estimated at 1.5 million. The contingent consideration had not been recorded by Polestar. Overall, the directors of Polestar expect the acquisition to be a bargain purchase, leading to negative goodwill. At the date of acquisition, shares in Southstar had a listed market price of 1.2 each. Below are the summarized draft financial statement of both companies. Statement of P&L for the year ended 2013. Scroll down, please. And down.
And you've seen that there's statement of financial position there
Yeah,
as well.
statement of financial position as at 30th September 2013. The following information is relevant. 1. At the date of acquisition, the fair values of Southstar's assets were equal to their carrying amounts, with the exception of a leased property. This had a fair value of 2 million above its carrying amount and a remaining lease term of 10 years at that date. All depreciation is included in cost of sales. Polestar transferred raw material at their cost of 4 million naira to South Star in June 2013. South Star processed all of these materials, incurring additional direct cost of 1.4 million, and sold them back to Polestar in August 2013 for 9 million. At September 2013, Polestar had 1.5 million naira of these goods, $1 million of these goods still in inventory. There were no intra-group sales. Polestar has recorded its investment in South Star at the cost of the immediate cash payment. Other equity investments are carried at fair value through POL as at 1st October 2012. The other equity investments have fallen in value by 200,000 during the year ended 30th September 2013. Polestar's policy is to value the NCI at fair value of the date of acquisition. For this purpose, South Star's share price at that date can deem to be representative of the fair value of shares held by the NCI. All items in the above statement of profit or loss are deemed to accrue evenly over the years unless otherwise indicated. Scroll down, please.
I'll scroll down. This thing is slow.
Yeah, required. Prepare the consolidated statement of profit or loss for Polestar for the year ended 30th September 2013. Prepare the consolidated statement of financial position for Polestar as at 30th September 2013. The following mark allocation is provided as guidance for this question. A 14 marks, B 11 marks, total 25 marks.
Okay, thank you very much.
Sorry, I can't hear anybody.
Sorry, give me a minute, please. Okay. We've been asked to prepare two different statements. And these two different statements, A is to prepare the consolidated statement of pure health. B is to prepare consolidated statement of financial position. The year end is stated September, as you can see. And yes, that is the date on top of all what we are given here. So examination approach requires that we put the format there, right? It requires that we put the format there. And we now begin to okay. I'm sure you can hear me now. I'm talking now. Can you confirm that you can hear me?
Yes, we can.
Okay. Polestar. Okay. The first requirement is to prepare, I'll say, Polestar Group consolidated statement of profit or loss for the year ended 30th September 2013, right? And all the figures I get, they are in thousands, yes. They are in thousands. I want someone to open his or her question and be telling me what you have. The first item, what do they call it? Revenue, right?
Revenue, yes.
Okay. After that,
Cost
we
of
have
sales.
cost of sales, right? Okay.
We have
So that will lead us to gross profit,
profit.
right?
Yes, they put profit / loss. The next one is distribution costs.
Distribution costs and admin
Expenses.
administrative expenses, right?
Yes, sir.
Yeah, after that,
Costs.
what did you say?
Finance
Finance cost.
Finance cost. Okay. Finance cost. Then that takes us to profit before tax. Is that correct?
Yes.
Profit before tax.
And the next one is income tax.
Income tax expense.
/ relief.
Okay, then you have, who has relief? Who is making loss?
They put
Is it the subsidy? No,
okay,
I don't have the question.
Yes. It's not the subsidiary, it's the parent.
Are you sure?
Yes.
Is the subsidiary your parent is
The subsidiary is making loss, but the parent is claiming the relief.
What do you mean that parent is claiming the relief? What do you mean by that? What me I can see here, profit before tax, parent has 13.5 million. Profit.
With less, yes.
subsidiary has loss.
It has 5.6.
Sorry.
Then you have income tax 3.5, expense for Polestar, the parent. There is the subsidiary that has tax credit. This is what we call.
Yeah, tax asset.
Yes. And it's the one that has the relief, not the parent.
So it's even from the gross profit that is making loss.
From the gross profit. That means that business should shut down. Don't you think so?
Maybe that's why they bought them over, so they can help their situation.
Yes. A company that is making loss from gross profit should be shut down.
They incur more cost than revenue.
If you can't change the function of such an entity, then shut it down. That is it. Shut it down. If you can't change the function. Take note, ladies and gentlemen. Know that there may be additional items that will come in. I know that because I've solved this question over and over. Well, you don't know. I'm not moving. What is moving here? You don't know because you've not solved. And the platform you are using will not even permit you to what is it called? Will not permit you to insert rows. And the best you should do is, in a situation like this, in between admin expenses and finance costs, you may want to leave like some lines.
So
You
it's
are
like
not
your
sure.
inverter is beeping.
Don't worry. You are right.
I can hear the power.
I know you can hear. Don't worry. You stop hearing now. Yes. So I will come back to insert those rows. I'm sure you stop hearing, right?
Yes, that's the.
I will come back to insert those rows when I get to that point. But for now, we'll continue because we're using it there. If we were to use that test rich, then it's better you insert rows like this. Why did I? Okay, let me do it the way you should do it in the exam. Because we have already know there are some things I heard you there. You can leave like 4 or 5. If you don't use all of them at the end of the day, no problem, right? No problem. But insert. Okay, after cost of sale, I know I will put a line there. After finance cost, I will put a line. After income tax expense, then I will have the total, right? Like this. I will now come and say profit attributable to profit attributable to we have owners of the parent then you have non-controlling interest, right? So okay, let's go and do that of SFP. Let's go and do that of SFP.
Yes, sir.
You have a question?
Oh, I was getting ready to call them out for you.
Okay, so let
When
me.
when you say hours of the parent, what is?
Sorry, what did you say?
You said hours. I didn't understand that statement there. I thought we were just sharing between parent and NCI. So why are we using hours of the parent?
Owners.
I was wondering what hours is.
Owners of the parents. I've corrected it. So then we have post group again.
Yes. Amen.
Consolidated statement of financial position as at 30 September 2013, right? Okay. We now come here to say assets. asset.
Oh.
Under assets, we have non-current assets.
Non-current assets.
What are the non-current assets we have? Property, plant, and equipment, have we?
And then financial assets.
And we have financial
Chairman, take this one. Hold on, I'll give you.
assets. Then, after that, we have current asset. Is current asset broken down into inventory, receivable, and what have you?
No, sir, they just wrote current assets. They didn't break it down. Yeah.
Sorry, 1 minute, please.
Sorry, good afternoon. I came in a little bit late. Please, how did you have the question? Was it shared on a platform or something, please?
He's on the group.
On the group.
On what?
On the WhatsApp group.
Yeah, I don't think I'm on the WhatsApp group.
So probably you might reach out to the admin.
Okay. Maybe later then. Thank you.
Okay. Sorry, for current asset, you say they did not break it down, right?
No, sir, they just put just current assets, and then they put the figures there.
Okay, so let's assume that nothing will come. Then after that, we have equities and liabilities, right?
Yes, sir.
And liabilities. Equity and liability. After that, we have
We have the equity shares, and then we have the retained earnings.
yes. Hold on. So we have equity share capital, right? We have retained. So assuming nothing like share premium. So I'm sure we'll have a subtotal there. Before NCI, then we'll have non-controlling interest. Then we'll have another subtotal there. And we'll now go and have liabilities. This should be total equity. Is there anything like non-current liabilities?
No, sir. Just current liabilities and then total equity and liabilities.
Only current liabilities.
Yes, only current liabilities.
Because the question has two requirements, it's loaded on its own. It's a 25.
Loaded.
It's a 25. Oh no, it's a 25 mark question. Okay. Again, using the exam approach, from what you saw, the subsidiary, the year end, the reporting day is 30th September, right? Maybe I should do group structure first. After doing group structure, then we can come back and do what I'm about to do now. So working one, working notes. Working notes. So working note one, group structure. Working notes one, group structure, right? So we'll say Polestar in South Star. And that is how many percentage? According to the question, is it given?
75. 75. I mean,
5%.
yes, 75%.
Okay, let me format it. Then, non-controlling interest will be the balance of 25%, right?
Yes, sir. 25%.
Okay. Date of acquisition.
1st of April.
1/2013, right?
Yes, sir.
I have to format that so that it will reflect number for me. Sorry, let me just say, no, this is test. 1 April 2013. Okay, reporting date. That is 30th
September 2013.
2013. If you now count the number of months, so we'll say number of post-acquisition months. That is from 1/4/13 to 39/13. That is how many months? That's your thinker in the exam.
I think 6. April, May, June, July, August.
6 months.
6 months.
Sorry, I understand you guys are not meant to go to the exam or with your wristwatch. Is that correct?
You can't go with anything. It will take your wristwatch.
You can't go with your wristwatch.
Yes, sir.
What of calculator?
Yeah, yes, you can go.
No, you can't
go.
go.
If we can't go with calculator, we are in trouble, Mr. Jamil.
If you don't go with calculator, you're in trouble.
Big trouble.
There's no trouble now. They're spread. They're spread.
No,
sheet.
no,
They won't allow you. They won't allow you to write the
you can
exam.
go in with wristwatch. It's just smart wristwatch. All these new.
No, they take it.
You can't go in with any research.
You can't go in with any wristwatch. They will take it. They will ask you to remove it.
So calculator, if I don't go in with my calculator, would they say I will not write the exam?
No, not you, as in me, as in the candidate is in trouble. It's not the examiner that will make you. It's you that will be in
But
trouble.
there is two things. One, the spreadsheet you will use, there is a calculator on that platform. Then two, if you don't want to use that, you can use Excel, just the same way I'm not using calculator here. So which trouble? What do you want to use calculator for? Let me go ask you. What do you want to use it for? Because the spreadsheet.
30.
Okay.
Calculator is faster. It's what we've been practicing with rather.
Okay. Then nothing like pen on pens or ruler. They will ask you what you want to use it for, right?
No, you go with a sheet of paper.
You know, I wrote my own ACC exam 2006. So The world has changed completely since then. Okay. Thank you. This more, which means, is there anything in the question that says profit should be deemed to accrue evenly? Is there anything?
Yeah, last statement.
Five, all items in the above statement of P or L are deemed to accrue evenly over the years, unless otherwise indicated. So what does that tell you? We want to earn a mark. We want to be smart. We want to outsmart the examiner. So let's quickly start. Revenue. Those things I used to do here, I won't do them now because there's no time. You understand what I'm saying, right? Those things I will put here, that are revenue plus times 6 over 12
those
here.
things help us. So maybe when you're sending it, you'll have help us to put it.
Hey, when? Whatever.
Those things help. Oh,
Oh, yeah, call the revenue.
Difference,
What is the
actually.
revenue of the parent? What is the revenue of the parent?
110,000.
We don't have time. Can't we?
110.
Just ignore it.
No, we can actually
Since
ignore
we
now. I'm
don't
saying
have
when
time,
it's
can we
sending it.
ignore it? We'll look at what is in the formula.
Exactly.
Now,
Because there is no time. We must finish this question in another 40 minutes.
Yes.
And I'm already afraid. I'm already afraid
don't worry, let's
where we
continue.
are. So I will say, what is the revenue of the parent, please?
110,000.
Then I will now say plus that of the subsidiary income.
66,000.
56.
66,000.
66.
66.
Yes.
66000 times 6 over 12, right? I close the bracket, at least for now, right? That takes us to 143 for now. You have earned a mark by doing that, you know that. So you must be smart for the exam.
I thought the accrue evenly means we should not do that.
Are you sure? It means you should do that. That is what it means. It means you should do that. Or does anybody have the same notion as her? Accrue evenly means you must time a portion. That is what it
So
means.
when you say time apportion, that's like the time 6 over 12 we did, yeah?
Yes, that is time apportionment. And that is because they say it accrues evenly. So I would say the cost of, say, equal minus, open a bracket. What is the figure for the parent, please?
88,000.
110.
Cost of
88.
88,000.
plus
67,200.
How much?
67,200.
Times 6 divided by 12. Close the second one. But now that is one.
I have a question before we go too
Go
far.
ahead.
So if this were an associate question, in that revenue, are we going to be doing the percentage of the ownership?
Hey, remember we solved associate questions.
Now, this was a question I said I had for you.
Wait. Do we consolidate the assets and liabilities of associates?
We do it on a
No.
one line.
No.
Do we consolidate the income and expenses of an associate?
No.
I know it's a one-liner, yes.
Okay, if it's a one-liner, on the face of pure hair, what is that one-liner? You remember I gave you a format.
In associates.
You have a format for pure hair. You have a format for SFP. See, this is the format for SFP, right? The amount that will be there sitting in the SFP. What about pure hair? You have the format. This is the format. Group share of the post-acquisition profit after tax / loss after tax of the associate. That is the first thing. Group share of post-acquisition. Post-acquisition means if this entity were to be an associate, you pick the loss after tax in the question, right? You multiply by 6 over 12. You must time a portion because we say post-acquisition, which is 6 months, times 6/12, then times the percentage you have in the associate. Then you remove these two things, provided you have that. So you don't consolidate the income and expenses. Adedoyin, is that you? Are you fine now?
Yes,
Hello?
Mr. Jamiu. Yes. I'll look for this question that I battled with. I'll share with you. But
Okay.
I get this explanation.
Okay. Okay, so I go back to the example, please. Distribution cost for the parent equal minus open a bracket 3,000.
Yes, sir. 3,000.
Plus open a bracket for the subsidiary.
2,000.
How much?
2,000.
2,000 times 6 divided by 12, right? Close the second bracket. That is 4,000. We are any marks. You must be smart. Do this, even if you can't do anything in the note. You must never lose all the marks here. Admin expenses equal minus open the bracket for the parent.
5250.
5250 plus for the subsidiary
2,400.
24, right?
Yes, sir. 2,400.
Times 6 divided by 12. Close the bracket, close the second one. We've earned another mark there. I will jump. I left some space there because I know some more things are coming. Equal minus finance cost. Parents, how much?
250,000.
250. Plus another bracket. Subsidiary.
Zero.
It doesn't have.
Yes.
So 0 times anything will be 0, right? Okay, that is 250. Another mark with hand there. You don't need to be doing subtotal. You know they don't mark subtotal. You know that.
Yes.
So even by
you don't need to
like
be
this
totally...
subtotal now, profit before tax. By adding it, I don't need to waste my time and do that. But it's better you do it because you are still going to share the profit. You have to do it because we are going to analyze the profit here, and that one will end in some marks. Income tax expense equal minus
Sorry, Mr.
parent
Jamil.
company. Yes, go ahead.
Yeah, I just want to confirm the distribution cost. Can you put your cursor on that cell of 4,000?
Wait, let me do this task first because I've already put equal minus here.
All right.
3,500.
How much is the tax for the parents?
3,500.
35.
Yes, sir.
That one is in bracket, right?
Yes.
Then plus for the subsidiary, that one is positive, right?
Yes, but it's a relief, yes, sir.
And because that one is a relief, rather than saying plus here, I would say minus. Okay. How much is that figure for the subsidiary?
1,000.
Times 6/12. Close the bracket and close the second one. That is 30,000, right? And that one takes us to profit for the year. Hey, if I will have found like 5 marks in
like
what
10
we've
marks
done.
already.
With 10 marks. 5 marks.
5 marks
It's
is small.
But this is a 25 mark question.
Okay.
Okay, so can you, I put the cursor there as requested. Have you seen what you are looking for?
No, for distribution. The one just
Okay,
above it.
I'll put it there.
Yeah, I've seen it. Thank you.
Lisa, can you also put your cursor on cost of sales?
There you are.
Okay, thank you, sir.
Okay, let's quickly go to, okay, so at the end of the day, whatever be the profit we have there, we come here. So let's quickly do for SFP. For SFP, there is nothing like time apportionment. You know that, right?
Yes,
We
sir.
are not time apportioning for assets and liabilities. Okay, but the PP for the parent is a figure.
Okay, PPE 41,000.
Plus
21,000.
21. Animal. Investment. Oh, this, do they call it financial asset? What name do they call it? Is it
Financial
financial asset?
assets. Then dot equity investment. You referred us to note 3.
Equity investment. Okay, in that note 3, what does it say? Can someone help me read it?
Polystar has recorded its investment in Southstar at the cost of the immediate cash payment, comma, other equity investments are carried at fair value through profit or loss as at 1st October 2012.
You know, equity investment. Don't worry, I've seen what I've heard what I was looking
Hello,
for.
hello, sir. Hello, sir.
Can you hear me?
Yes, sir. The PPE, sir. I think there's a fair value adjustment under the note 1, sir. For
We
Polystar.
are not yet dealing with those adjustments. We are coming back. I
Okay,
said
sir.
first do all this before you go to working notes. We are coming back. So, Emmanuel, what I wanted to take from the note you read is, you know, from what you guys did in IFRS 9, investment in equity is either fair value through P or L or fair value through OCI. I wanted to be sure that the examiner mentioned in the note the type of equity investment it is. And from what you read, it is equity investment at what? At fair value through P or L.
P or L.
Yeah. No fair value gain or loss on that, we go to P or L. But if you recall, when I was solving either a group account question with you or a question involving preparation of financial statement for a single entity, I mentioned that when the examiner is silent, what did I tell you to assume it is? When it is silent, as to whether it's fair value or fair value to OCI, yes, I say assume it is fair value to P or L and state that assumption. Never forget that. Never forget that. Never forget that. Okay. Is it both parent and subsidiary that has this, or is only the parent?
It's only the parent. Sorry, sir, my eyes.
It's the parent. Like
It's only the
investment in
parent.
the subsidiary.
How much is it?
It's more of an investment in Southstar.
How much do you have there? Oh, it's not.
16,000.
Wait, oh, it's like you guys are not.
60,000. Only the parent.
Wait, you guys were hesitating. I thought something is wrong. Wait. Oh. Hey, don't let me put 16,000 now, right?
Yes, because
The question is, investment in subsidiary, where is it sitting? Is it not sitting inside this 16,000 too?
Yes, it is.
Let me leave this one and come back to it. Let's go to current assets. How much is current assets?
16,500.
For the parent and for the subsidiary?
4,800.
4,800. Okay. So we've found another mark there. Let me get this total. I always like to paint it in green so that at the end of the day, we'll just be looking at the two green sides, whether they equal. Equity, share capital, you and I know before today that it should be that of the parent only, right? How much is the share capital of the parent?
30,000.
30,000.
Is it? Yeah.
How much?
30,000.
30.
30.
Yes, 30,000.
I don't know why you guys were hesitating now. While you hesitate, I become curious, so I come to check it. Okay, so retained earnings. That one is not. I don't trust.
28,500.
When you hesitate, I believe something is wrong.
Yeah,
So retain earning, we will get that by way of, working note. NCI will get that by way of working note.
we should not
So
put this one
current,
then.
which one?
The ones that we have on the question.
The notes. We are coming back to treat notes.
Okay.
Current liabilities. How much for the parent? We want to end our mark here for now.
15,000.
15. Plus for the subsidiary.
7,800.
How much? 7, 8.
Yes, 7,800.
Now, we've not started taking into consideration any notes. What we are simply doing is we want to get cheap marks. Cheap marks.
So that if we do
With
all this,
cheap
I've been
marks.
passed. Like I've gotten like 13/25 already.
Okay. This question carries 20. Is it not 25 marks?
25 marks.
It carries 25, It's 25, right? Maybe we've got like 8 out of 7 or 8 out of 25.
Ah.
But you know, this one is very cheap to. What did you say?
There's still plenty work now.
But even somebody doesn't even know what to do again after this, these 7 or 8 marks may be the deciding factor. If you have got like 45 elsewhere in the other questions, if you just had like 7 or 8 marks, you cross the hurdle and you play well. Even if you don't know how to deal with the notes. So just be smart. Let's go to working 2 now.
About it.
Yes, be smart. Where you need to earn cheap marks, earn it. Earn it. Don't waste time. Okay. The usual note is to do net asset of subsidiary, right? Net asset of the subsidiary. The subsidiary being South Star, right?
Yes.
So usually we'll have a column for at reporting day, right?
Yes.
At reporting date. Another column for
at acquisition
date. Now, you know this must remain in your head. Harry. They are all in my own.
Harry means the way you taught us this one. Stay.
It stays. Okay, fantastic. It's good that it stays.
Hopefully.
Okay. So this one is A, column B, and column C equals A minus what? Minus B. This is the net asset, the popular net asset working I've been talking about. Okay, you know the share capital.
The most important working note.
Yes, that is
fits into a lot of things. Yeah.
We have share capital, we have retained earnings for the subsidiary. How many more things will come here? I don't know, right? Because I don't know, the best thing is to leave enough line. You can leave like 4 or 5, right? 1, 2, 3, 4, 5. Let's leave 5. If you don't use it at the end of the day, no penalty, right? So then we can go to working 3. Working 3 is supposed to be goodwill, is that not?
Yes, goodwill.
Yes.
But from what you read, I heard something that it is not going to be goodwill. Did you not pay attention?
Yes, they said it was going to be bargain purchase.
And for the first time, we are going to see bargain purchase. In fact, this is one of the reasons I'm solving this problem with you. Where did you see it? Where did you see it?
Is the last, yes. The last line.
I expect the acquisition to be again to be a bargain purchase. So instead of goodwill, we'll now call it gain from bargain purchase. otherwise known as what? Negative goodwill. You know, you've never seen this in all the questions we've solved together. So, but the format remains the same. I'm sure you know that it's still the same format. We are going to say fair value of the consideration. The second thing is fair value of NCI, at which date? Acquisition date. So the two figures will be added together, right? Then we'll now say fair value of net assets of the subsidiary at acquisition date, right? So when we remove that, it's supposed to be goodwill or gain from bargain purchase. But this examiner is Olofofo. He should not have told us. But we gain from bargain purchase, which is negative goodwill. So we are coming back there. The reason you have to put all the format is the moment we are getting all the variables, we are bringing them straight here so that we don't waste time. Working for is NCR at reporting date, right?
Yes, sir.
Reporting date. There are two items. There could be three, but here there won't be three, right? You know where there won't be three? Because there is not even goodwill. Not to talk of impairment of goodwill. So we start with fair value of NCI at acquisition date. You know, it's going to be the same figure as what we have here. So I can link it to this place. I'm sure you see the linkage I'm doing there. I'm linking it to column 70C. I mean 70C70. So then the next thing is NCI's share of post-acquisition retained of the subsidiary, right? Which is the figure I will get in that working note too. The most important working note. So then we go to number 5, which is consolidated retained earnings, right? Hey, ladies and gentlemen, you know it's not only, so we'll put retained earnings of the parent there, retained earnings of the parent as given in the question, right? That figure is coming here. Then the next thing is post-acquisition return, group's share of parent of the subsidiary. Every other thing will now be, I can leave as many lines as we think, right? As we think. I'm not sure, but I will leave like 5 for now. 1, 2, 3, 4, 5. I can insert more. If you are not sure in the exam, you can leave like 6 or 7. But here I can insert. Your spreadsheet in the exam, you can insert. These are the key working notes. But remember, we are doing 2 statements. All the working notes I've shown you, they are for SFP, right? They are for SFP. There is also a working note for P or L, but the only working note we do for P or L is when we are done with the P or L, we want to analyze the profit between owners of parent and NCI. The NCI portion, that is the main working note. So when we get to that river, we'll cross it. So let's now read the beginning note, because there is something in the beginning note of the question. Let's go back there. Time is ticking. So ladies and gentlemen, look at it. On 1st April 2013, Polestar acquires 5% of the equity share capital of Southstar. Southstar has been experiencing difficult trading conditions. and making significant losses. In allowing for SASTA's difficulties, Postal made an immediate cash payment of only 1.5 per share. 1.5 per share. The question then is, how many shares does SASTA have? Who can tell me from what you see here, how many shares does SASTA have?
60 million.
Are you sure? Where did you say 60 million?
50 cents. 30 million divided by 50. 50 cents.
Is that SASTA? Is that
Sorry,
SASTA?
6 million. 6 million divided by.
That's 3 million shares.
No.
12
You divide by
million.
0.5.
That's 12 million.
You divide by 0.5, oh, somebody multiply. No way. You divide by 0.5. That gives you 12 million, right? That gives you 12 million. Okay, if it's 12 million, this guy acquires 75%. So 75% multiplied by 12 million, isn't that 9 million? Correct me if I'm wrong. 75% of 12 million, isn't that 9 million?
Yeah, you're right.
Okay. Then when you now multiply it by the immediate cash of 1.5, 9 million multiplied by 1.5, how much does that give to you?
13.5.
13.5. Okay, take note of that. In addition, Postal will pay for the amount of cash on 30th September 2014. That is in 1.5 years. Oh, no, in 6 months' time, right? Is it not? No. In 1.5 years' time. You know, acquisition day is 1st April 2013. End of that year is 30th September 2013. That is 6 months. Then 30th September 2014 is 1 year. So in 18 months' time, it will pay for the amount in cash on 30th September 2014 if Southstar returned to profitability by that day. You know the reason I was emphasizing that statement. If. Okay. This examiner is Olofofo. When they say if it will return, that amount you will pay without seeing what you have here, is that supposed to be a deferred or contingent consideration?
Contingent.
Yeah, because it's a condition is attached. Once a condition is attached, which means payment is subject to meeting that condition, it's no longer a deferred consideration. It is a contingent consideration. But the examiner, being the Olofofo type, he made it known here. He says the value of this contingent consideration at the date of acquisition was estimated to be 1.8 million. But at 30 September 2013, in the light of the continuing losses, its value was estimated at only how much? 1.5 million. The contingent consideration has not been recorded by Postal. Ladies and gentlemen, there are two considerations, right? The cash, which we have determined to be 13.5 million. The contingent consideration measured at fair value of 1.8 million at the date of acquisition, which was not recorded, which has not been recorded up till now. But you and I, we saw 16 million here in the books of parent company as financial asset equity investment. And going to note 3 is telling us that Postal has recorded this investment in Southstar at the cost of the immediate cash payment, which means that 13.5 has been recorded. It's now telling us that other equity investment are carried at fair value. What does that tell you? That's 16 million sitting in the books of the parent company. Are we together? That's 16 million sitting here. It consists of 13.5 as cash investment in the subsidiary. And the balance of 2.5 represents what? Investment made by pollsters outside the group, in another company outside the group. Do you agree that analysis with me?
Yes.
Yes, sir.
Completely.
Okay. So that will be the next working note I will quickly do, because without doing that, so I'm going to say total cost of investment. Total cost of investment in subsidiary. Are we together? So I want to quickly do that. I will now say cash consideration. So how did we arrive at that? We picked the 6 million in the books. We divided it by 0.5, which is 50 cents. That takes us to 12 million units. Yeah. Then we multiply that by 75%.
75%.
That takes us to what? 9 million units. Then we multiply that by 1.5, the cash paid, right? Since you said this thing helps, I'm being forced to do it now. So I'm saying 6 million divided by 0.5, multiply by 75%, then multiply by 1.5. So that gives us that 13. I thought I removed this funny zero from this thing there. Didn't I reduce it up to this point? Okay. Then we have deferred consideration. Remember, they said the fair value of that deferred consideration at the date of acquisition was 1.8, right? But they said that the reporting day, the fair value has now changed to 1.5. Isn't that what we saw?
Yes.
How much should we use here for the purpose of determining total cost of investment in subsidiary, otherwise known as fair value of consideration?
We use
Are
1.5.
we 1.8 or
I think
1.5?
1.5.
1.5, the fair value. Yes.
Are you sure? Are you sure?
Let's see it now as slide.
Consideration. I said it, even though we did not say it in the question. See, for contingent consideration, can you see my slide? Always come back to read. Measure at fair value at the date of acquisition by discounting the probable future amount to be paid using the appropriate discount rate. You know the examiner has multiplied for us. Okay. We are not doing that. He has measured it at fair value for us. It's not that he gave us the cash to be paid 18 months today. He gave us the probability of meeting that condition, and he gave us the discount rate. He did not do that. If he had given us those three, we would have done it ourselves to arrive at 1.8. But he has done it for us. We are not doing that. Subsequently, what did you see here? Subsequently, measure at fair value. Changes in fair value must be recognized in where? P or L. Didn't you see this? That's the fact that it reduced from 1.8 at the date of acquisition to 1.5, a reduction of 300,000 in a liability. It's impacting P or L. It's impacting P or L. The contingent consideration here is a liability, is to be paid. The other bullet point here, which says where the contingent consideration involves the issue of shares, that is not the case, right? Because it's not going to be shares, it will be cash. So don't read this one for now. But when you are solving another question on your own, and you see a contingent consideration that involves issue of shares, then that is when you should apply this. So the first two bullet points are the one we are applying in this question. So we are using 1.8 at the date of acquisition, ladies and gentlemen, 1.8. And I can help you with the accounting entry so that you can know what we are going to do. So the total consideration we are using is 115.3. So in terms of the accounting entry, remember the examiner says that 1.8 has not been recorded. Isn't that what he said? He said so.
Yes.
I will now say to record the contingent consideration at the date of acquisition. Are we together? So you have to say, what will you say? You will say debit and credit. See the debit and see the credit. I will say debit, fair value of consideration, right? Of consideration. Consideration, which is cost of investment in Southstar. Right? Then we are crediting where? We are crediting contingent consideration, which is a liability. So at the reporting day, we have a year to pay it. So it's a liability. Liability. It's part of current liability, right? But at the date of acquisition, we have 18 months to go. But the reporting day, we've just got 1 year to go, which is 12 months. So that is that. In order not to forget, this cost of investment, where are we going to use it? This 15.3, where are we using it? We are using it to calculate, which is gain from bargain purchase. So I should quickly come here and pick it. Make reference to working what? Working note as 6. Is it working 6? So, and I link it there. I link it there immediately. So be smart, be smart. Time will be ticking. You won't have that time. So take it there. Another thing I need to quickly do is the reduction in that contingent liability. Sorry, contingent consideration. That will be my working 7. Are we together? I will call it fair value of what? Fair value change. Fair value change. Are we together? Slash reduction in what? Contingent consideration. Are we together? So I want to say contingent consideration at the date of acquisition. Sorry, is the fair value. Fair value of what? Contingent consideration. The date of acquisition, which is 1/4/2013. So that is 1.8. At the reporting date, it has reduced. I will leave a line there. I will say fair value of what? Contingent consideration at reporting date, which is 30/9/2013. That is 1.5 according to this examiner. Then the difference represent what? Reduction. This reduction in contingent consideration, is it a fair value gain or a fair value loss? Remember the requirements that you read there is that you should go to P or L. Is this one a fair value gain or a fair value loss?
Gain.
Reduction in liability is a fair value gain. So fair value gain on contingent consideration. So say this figure minus this figure. Sorry, it's better I do it the other way around so that it will be in jacket. But the fact that it's in jacket does not mean it's a loss, it's a positive. So accounting entry for that. Who can tell me the accounting entry we should pass for that? What should be the accounting entry for that?
Debit contingent consideration, credit P or L.
Fantastic. I agree with you in total. So by how much? By this 300. But ladies and gentlemen, have it at the back of your mind that you are preparing two statements. I don't know how many of you have ever worked any question before involving both P or L and SFP. This is the first time I'm doing it with you guys, right? And because this is the first time I'm doing it, right? Always have it at the back of your mind that this hey, who is that person?
Mr. Jamie, continue your time.
I would say fair value gain. That is profit or loss, right? So because we are preparing two statements, as we are taking it to P or L, we equally need to take it to consolidated retained earnings. Consolidated retained earnings. Remember, it belongs to the parent company. You must take it there to the consolidated retained earnings. You must take it there, right? So, in order not to forget, let me quickly go and take it to where it should go. So I will take, because I've told you it's going to be part of current asset, I will say plus what? Plus working 6 figure, that is the minus working 7 amount, right? So I come here and say plus 1.8. Initially, we put contingent consideration amount of 1.8 there, right? Then we reduce it further by debiting it 300. So have that at the back of your mind. So that is an exam approach. You must quickly come and do what should be done to these current liabilities. Quickly come and do what should be done to it. If you wait till the end, then you are doing yourself an injustice. If you wait till the end. The other leg, which is the reduction in the contingent liability, that will say we should take to P or L, this 300. I will take it to the face of P or L now, and I will take it to consolidated retained working note. So it's one of the reasons I left this place vacant. Let me highlight them in red. Anything I'm bringing here that is in red, it shows that it wasn't there before. Fair value gain on contingent consideration. That is working what? Working note 7, right? 7. So I link that 100 here. That's 300. I link it there. Yes. I'm not double counting by taking it to consolidated return again. I'm not double counting. It's because we are preparing two different statements and we need to. So I will now say fair value gain on what? Contingent consideration. That is working 7. Immediately I bring it there. I don't want to forget it. I don't want to forget it. Ladies and gentlemen, I would like to pause and say something.
I thought
I
you were
would like
pausing for questions, sir.
Oh, are you raising your hand? I can't see your hand up. Oh,
No,
oh yeah.
So
Ask any question? Any question?
yes. See this, what we just treated now. I don't understand. So I get how we got the fact that is a like is a game. You understand? But after that, I don't understand how we went to go and put it in current non is it current liabilities or non current liabilities, and then how we brought it to retained earnings. I know why we took it to POL, but those other two entries that we made.
How did you know why we took it to pay her? How?
Because I know that it's like a gain to us.
Based
So
on what I said, is it based on what I said here in this slide?
yes,
Or
yes.
you remember that one before today?
Yes. I know this part that we are taking it to POL, but those other two that we did, I don't get.
Oh, let me ask you, ladies and gentlemen, not only you, we are preparing two different statements here. This is the first time we are doing it. If you were to do P or L separately, you know quite right that you will take it to P or L, right? You are not doubting that.
Yes, sir.
If you are doing SFP only, and there is a requirement in the standard that something should be taken to P or L, where will you take it to?
We reflect
If
it
you
on
are
the
doing
retained earnings.
That is why we are taking it to retaining, consolidated retaining.
Okay.
Does that make sense?
Okay. Yeah.
Because I've told you there are two different statements we are doing. If there's something you should take to P or L, please take it to P or L. But that same thing must go to consolidated retaining, especially if it's something that affects the parent company. If it's something that affects the subsidiary, then take it to the net asset working note. In addition to showing it the statement of P or L, because there are two different statements we are preparing.
Okay.
Is that understood?
Yes. How about the liability part?
Okay, so that is another thing entirely. So the liability part. Before we did working 7, what did the examiner say about this 1.8? Did he not say it has not been recorded?
Yes.
13.5 is what they have in the SFP. They have 13.5 because 2.5 is there that represents other investment.
We don't know. Yeah.
But because 1.8 has not been recorded, we had to record it. Isn't that what we did? And look at the accounting entry I show you. I say you will debit cost of investment in subsidiary, which means increase it by 1.8. That was the reason we increased it from 13.5 to 15.3. I now say credit where? Credit contingent consideration. Contingent consideration is a liability. It's not a liability because you have to pay this cash 18 months from the date of acquisition. Now, we have moved to the end of the year in this working note 7 that we are doing. We've moved further by 6 months. We are at the end of the year, right? So what we are doing here is fair value change reduction in contingent consideration between acquisition date and what? Reporting Okay. I don't know why my cursor is not moving again. Honestly speaking, I don't know why this cursor is refusing to move. Hey, what's waiting with this? Waiting with this. Okay. What am I trying to do? Okay. That started moving now. You see everything started moving. Okay. So we said we should credit that liability. So we've moved further by 3 months. At 6 months, we have 12 months to pay that amount. And they said that liability has reduced. Initially, we created a liability with 1.8. Then we reduce it by 300. Effectively, it is 1.5 we are putting in the SFP. So what I did in the current liability was to add 1.8 and reduce it by 300. Effectively, what I put in current liability is 1.5. And that is to recognize that you have a liability of 1.5 yet to be paid. You have a liability of 1.5 yet to be paid. Can you understand it now? Or
Yes.
you have still not?
No, it's fine, sir. Thank you. Although I was thinking that was that 1.8 that we'll go and put, but it's 1.5.
You thought it is 1.5 we'll put, right?
No, I thought it was 1.8 that we'll go and record.
That was the reason I said in that current liability, I said plus working 6. I put 1.8. But that liability has reduced at the end of the year. So you have to reduce it. If you don't reduce it, given that you've taken 300 to pay your SFP will not balance. It will not balance. Okay, ladies and gentlemen. Ladies and gentlemen. I've still not even finished. Okay. I think the only thing I will have done is to marry this note at the beginning with note 3, so that the remaining 2.5 here, I will compare with what they are talking about in note 3 to recognize reduction in fair value here. That is note 2. But you see, I brought this question for many reasons. One, it has contingent consideration, which you have seen how to deal with it today. I've never solved any question involving contingent consideration. Number 2, this question involves gain from bargain purchase. We've never solved anyone like it. Once we get that gain from bargain purchase, do you know what we are going to do with it?
You take it to P&L.
Take it to consolidated.
Can you guys hear me?
Yes.
I don't know what happened. The second device I was using for mic just went off. So I had to put on the other one. What I use the second mic for is second device for is to actually monitor that you guys can see my screen. And that is the one I'm using to speak. But now I've got to use this because that one went off. I don't know what happened. Maybe I forgot to charge it or something. Well, you can hear me on this. It's just that I won't be able to see whether you are seeing my screen or not. And I may not be able to see when you raise your hand unless you shout. So what I wanted to say is, do you know that contingent consideration, when we get it at the end of the day, gain from bargain purchase, do you know that we are supposed to take it to P or L as an income?
Yes.
Can you guys remember that?
Yes.
Then when we take it to P or L as an income, because we are doing two statements, we must immediately take it to consolidated retained earnings as well. We must immediately take it to consolidated retained earnings. Another reason I brought the question, right? Another reason I brought the question has to do with this note, this funny note 3. Note 2, rather, note 2. But it's already 12 minutes past 1. It's already 12 minutes past 1. If I continue, we will do this question till 2 o'clock. I want to ask a question.
So, sir, sorry, sir. In an exam condition, how do we then minimize time if solving these take all this long time?
How do you do what?
Minimize time, sir. Make
Time
the best
wastage.
use of time. Yeah, exactly. Avoid time wastage and all.
But you know the approach I'm using now is the approach you should use in the exam. Do the SFP.
Okay,
it's likely to be SFP only or P or L only. Open the format, fix those figures there, end the marks. Then as you do the working note, take whatever needs to be taken to that SFP or P or L, take it there immediately. If it's SFP, you must do those 5 key working notes as we have done from working note 1 to 5. Then as you are getting each figure, be taking it there. You know the reason this question alone on my own, I will do it in 35 to 40 minutes on my own. I will do it in 35 to 40 minutes or less because I've even solved it several times. I should do it in 20, 25 minutes on my own. But you know, because I have to explain, you have to ask questions. That is why it's taking us time. In the exam, it's not supposed to take you time like this. How do you know whether you are saving time or you are still wasting time? It's for you to go to that test reach that I show you today. Time yourself. Solve question there, time yourself. Put yourself in the condition as if you are in the exam hall. Although, as long as you know that you are not in exam hall, that anxiety will not be there. I don't know whether it happens to you. In my own day, once I'm in the exam hall, I know that it's a different ball game entirely. Exam hall is always different. Being in the exam hall is always different. So, but make sure you go to that test reach to solve question, time yourself, put yourself as if you're in the exam hall. That is the only way. There is no alternative way. That is the only way. And you know that every question carries mark. So if a question carries 20 marks and you have 3 hours in the exam, is it not 3 hours you have for the entire exam? Correct me if I'm wrong. Is it not 3 hours?
Yes, it is 3 hours.
Okay, so if a question carries 20 marks, 3 hours is 180 minutes. So when you divide, you say 180 minutes times 0.2, because 20 question, 20 marks is 20%, right? 180, so that is 36. So this type of question in the exam will carry 20 marks, which is under section C. And you know you must do it in 36 minutes. The only way you can master that is for you to go and be solving questions on that test reach and be timing yourself. Without doing that several times, there's no way you can know whether or not you've mastered it. So, ladies and gentlemen, my proposal, option 1, let's stop here. I will send you the full solution. Option 2, we do it to 130, subject to being able to do this note 2, up to note 2. What do you think?
Option 2.
Tell me what you want.
Option 2, please.
I should continue up to that note 2, right?
Yes,
Yes.
sir. 130.
Okay, so let me quickly do note 1. What is note 1 saying? Unfortunately, speak because I can't see your hand again. And let me know in case you can't see me. So working 8.
So why are we not doing to note 3?
Okay, we can do to note 3 if you want it. It's note 2 that I look to be. We can do up to note 3. So note 1 says at the date of acquisition.
Some of us have another facet too, and this has been a long one.
I know that was the reason I said I would do it up to 130.
He said he will send it to us later.
I will send you the solution. Whether or not I do it to note 3, I don't do it to note 3. So
Yes,
I will send you the solution.
Do it.
130 is fine, Mr. German. It's just that we should try not to
Okay, at the
Just-
date of acquisition.
If they want to leave, they can leave.
Don't
So
let
long as
us
they
waste time. Don't let us waste time again. At the date of acquisition, the fair value of Southstar's assets were equal to their carrying amount with the exception of leased property. This had a fair value of 2 million above its carrying amount and a remaining lease term of 10 years as at that date. All depreciation is included in cost of sales. Let me quickly do that. That is fair value adjustment on leasehold assets of fair value adjustment on leasehold assets of Southstar and additional depreciation thereof. Okay. Immediately I do this. So I'll say a fair value adjustment, fair value adjustment. So the fair value adjustment amount is an upward fair value adjustment, right? Upward fair value adjustment of how much again? 2 million above his carrying amount. 2 million above his carrying amount is 2 million, right? So the accounting entry for that would be to debit PP, right? PP 2 million and credit fair value adjustments 2 million. That is 1. I will effect those adjustments now, but let me do additional depreciation because there must be additional depreciation. That is the B part. Additional depreciation on leasehold assets of Southstar, right? So the additional depreciation, what's wrong with this thing? Additional depreciation is going to be that figure of 2 million. Remember the useful life they mentioned there? Can you remember the useful life?
10 years.
Right?
10 years.
Multiply by what?
6 divided 12.
6 over 12 times 6 over 12. So I pick that figure. I multiply it by, sorry, I divide it by 10. I multiply by 6 divided by 12. That gives you 100. The accounting entry for that is we debit what? We are doing 2 statements. The owner of the asset is the subsidiary. So I will debit post acquisition return of who? Of the subsidiary. How much? With 100. I will credit what? PPE with 100. It's not only post acquisition return. I will credit. Where do they say? Where should we charge?
Cost of sales.
Cost of sales. Cost of sales. So that means I will say debit pari of subsidiary. That is for the purpose of SFP. For the purpose of P or L, I will say debit cost of sales, right? for the purpose of P or L. So you can see that I'm taking care of the two statements immediately. Now, what should I do now? I will go to the SFP. I will increase it by 2,000 and I will come and reduce it by 100. You agree with me? Now we go to net asset of the subsidiary. I will put the fair value adjustment of 2,000 there. And I will equally both at reporting and at acquisition date. This figure will not be extended to the third column. But this 100, I will take it to the face of P or L. I will add it to cost of sales. But the other leg of it, sorry, not the other leg. For the purpose of SFP, I will include it in the net asset of the subsidiary. So let me come to the SFP. PP. Isn't that working 8? Remind me. I will say plus working 8A, right? Minus working 8B. So I say plus working 8A. Will there be PP minus working 8B? We credit PP 100. That takes us to, then I've taken care of the SFP. What else on the face of SFP? Not for now. On the face of statement of P or L, they said we should add something to cost of sales, right? So I say plus working 8B, right? Working 8B, 8B. I come here inside the bracket, inside, I come here and say plus that 100, which is cost of sales. I'm adding it to cost of sales, right? I'm adding it to the cost of sales. So I've taken care of what should affect P or L. The net asset working notes. I will say fair value adjustment on leasehold assets. That is working 8A. So that 2 million I'm bringing in here. I'm bringing it here. I told you it will be at reporting date, it will be at acquisition date, post-acquisition figure will be nil. We can say this figure minus this figure, yes. Another thing I'm bringing here is additional
depreciation
on leasehold assets. That is working 8B. I'll put it here in jacket at reporting date. That is where I say debit post-acquisition return of the subsidiary. But we never put it at acquisition date. This is what we've always done. Then you can see it's affecting the post-acquisition return. So I've taken care of everything I did in working 8. This is the examination approach. This is the examination approach. It makes it to balance. So let's look at note 2. Is that note 2? That is where I'm focusing. So I'll say working 9. Working 9. Working 9. What is happening working in note 2? That is the note, the main note. I brought this question. Look at it, ladies and gentlemen. It says Polestar, the parent company, transfer raw material at their cost of 4 million to Southstar in June 2013. At their cost. Did the parent company make a profit on that transaction?
No.
No.
Did they make a profit?
No.
But you know, by transferring raw material at 4 million, which is the cost, you know, the only thing is that you have not made a profit, but you will have recorded it as part of your revenue, right? This is an intra-group sale. That 4 million, we will remove it from revenue and from cost of sale. Do you agree with me?
Yes, sir.
I want you
You
to
are right,
agree or
sir.
disagree.
Yes.
That 4 million will remove it from revenue and from cost of sales. But there is no profit on it, so there's nothing like unrealized profit. Let's look at what Southstar did with it. They said Southstar processed all of these raw materials, but it incurred additional direct cost of how much? 1.4 million. So he bought it for 4 million. It incurred conversion cost of 1.4. So the total cost of what it produced at the end of the day is how much? Southstar, what it produced?
5.8.
5.4. Fantastic.
5.4.
What did he do? What did he do? He did not sell it to outsiders. He sold it back to Poster.
9 million.
But when he sold it back, unlike what Poster did, when he sold it back, he sold his own at a profit, right? Back to Poster in August. For how much? 9 million. How much profit did he make? How much profit did Southstar make?
3.6.
What did he say? 3.6.
3.6.
That is the total profit. Again, ladies and gentlemen, Southstar will have recorded that 9 million as a revenue. Is that not? So what we should do again is that 9 million, we will remove it from revenue and cost of sales. Do you agree with me?
Yes, sir.
Yes.
Yes,
That
sir.
is another thing. That 9 million will remove it from revenue and cost of sales. Then, even though he made a profit of 3.6, is that the unrealized profit? The answer is no. Unrealized profit is only the portion inherent in the remaining inventory. It says, as at 30th September 2013, Poster had 1.5 million of this gold still in inventory. There were no other intra-group sales. So in calculating the unrealized profit, it will only be calculated on this, the remaining 1.5. There are various ways of doing that. But the approach I will use is, I will say, how much is the total profit you made, Mr. Southstar? You made a profit of 3.6, right? Divided by your revenue of 9 million. That will give me a profit margin. Is that not? 3.6 divided by 9 million will give me the profit margin. I will now multiply that by 1.5. Can somebody do that and tell me what you will have? 3.6 divided by 9 million, what does it give to you?
40%.
40%. Then multiply it by 1.5. What do you have?
600,000.
So unrealized profit is only 600. Unrealized profit, what should we do to it in the P&L? What do we normally do to it in P&L?
Add it to cost of sales.
Fantastic. We'll go and add it to cost of sale. But for the purpose of SFP, what do we do to it? We have to determine who is the seller, right? That made that unrealized profit. Who made the unrealized profit? Southstar. What do we do for the purpose of SFP? We take it to the net asset of that subsidiary to remove it. Isn't that what we do?
Yes.
That is what we used to do, and that is what we are going to do. So I've explained it. It's just this note. Is this?
Sir, so is it is it only when it's from the parent that we take from the inventory, like we debit, or is it credit now? Credit inventory. If the
Yes, so
parents,
the other, I will show you the accounting entry. There is the other leg of that 600 will affect inventory. I will show you the accounting entry here.
okay.
So I will say intra, I will just call it intra group sales of raw materials and finished goods and unrealized profits thereon, right? Okay. So it's just this note. Otherwise, I will have stopped. So this note, we have A part, which is what? Intra group sales. That is transfer of raw materials from who? From Poster to Southstar. Okay. So value of intra group sales, right? That is how much? That is 4 million. Remind me, is it not 4 million? It's 4 million.
Yes, sir. It's 4 million.
I would just say the above amount will be removed from both revenue and what cost of sales. The number B, I would say intra-group sales. Again, that is transfer of finished goods from South Star to Polestar. So I will say value of intra-group sales again. Let me just borrow what I did here. That one is 9 million. Is that not? It's 9 million. Again,
Yes,
I will just put another note here and say the above amount will be removed from both revenue and cost of sale. The C part.
So if we don't do this thing and we just go and remove them, we won't lose any mark, right?
I don't think you should lose mark. But does the examiner want you to show mark? Oh? But you won't lose any mark if you are sure. If you are sure, you won't lose any mark. Or you shouldn't lose any mark. I can't say that authoritatively. So, unrealized profit on sale of finished goods by Polestar to South Star. It's unrealized profit we are calculating now. And the unrealized profit is simply the value of the remaining inventory, which is 1.5, multiplied by, I open a bracket, another bracket. No, I will say 9 million. The guy sold it for 9 million minus 5.4. We all know where 5.4 is coming from. Close the other bracket, divided by what? 9 million, right? That is what gave us that profit margin. Close the other second one and close the final one. Okay. So I would say equal, let me do it the way I did it there, 1.5 multiplied by, open the two brackets, 9 minus 5.4, close the first one, divided by 9 million, close the second one, close the last one. Yes, 600. That is how you got your 600. The accounting entry
So
for
I don't
this.
understand that. How did you get
Hello.
5.4?
Hey, the 5.4. What should I do? What should I do? What should
Okay,
I
4
do?
million plus 1.4. Okay, okay.
You've got it. But if you are
Yes, yes.
revising, I hope it will not cause any problem.
It's like I put it as notes.
That is what I want to do here. So that you will not, because there is nobody you will ask then, no. And when students don't have, depending on whether you like me or you don't like me, I don't know whether you've seen my face before. You say, where does this stupid man get this thing from? Note, the 5.4 there represents the amount of paid by South Star purchase the raw material from star plus how much? 1,400 cost incurred by South Star to process the raw material to finished goods. Does that make sense to you now? Yes.
Yes, sir.
Okay, so the accounting entry, debit, credit, debit, credit. When I'm debiting, I'm going to debit unrealized profit. Because the seller is the subsidiary, I will debit pari of the subsidiary, post-acquisition returning of the subsidiary, slash, where are we supposed to put it in P or L? Cost of sale, is that not? We're adding it to cost of sales, 600. And we are crediting inventory. So this is the aspect that affects the SFP. Permission to go and effect it now. So I will go to the face of the P or L. I will say revenue. I will say minus working 9A minus working 9B. Are we together? This one I will say minus working 9A minus working 9B, then plus what? Working 9. That is it. So I will quickly, okay, I will say minus 9A, then minus 9B. I get it. So it takes us back to what? 130. 130. Are we together? 130. Then for this other one, I will say, oh, I have to carefully put it inside before the last bracket, right? Minus 9A minus 9B, then plus 9C, right? 9C. Okay, that takes us to 109,300. Then don't forget, on the face of the SFP, we say we should reduce inventory. Inventory sits inside current asset, is that not? I will say minus working 9C. It sits there, minus that's 600 inventory. Also, to net asset of the subsidiary, we say unrealized profit on sale of inventory by South Star to Polestar. Okay, so it's going to be minus 600 here, right? Minus 600 because we said we should get it. Here it should be nil. It must not affect the date of acquisition. It will be nil. Yes. Okay, so I think I can safely stop here. But let me tell you something. Even though I'm going to safely stop here. You know, I've solved this question before now, right? I have the solution. But my working step here is a bit different. It's slightly different from the other one that I have the solution. I don't have the time to complete this one, but it's exactly the same thing. No, you will see that it's exactly the same thing. It's just that maybe what I call working 7 here, maybe working 9 in that other one, but it's exactly the same thing. I will leave this one here. I will date it today. I will say 29 May 2020, 22. I will now create another one here, right? The other one I will create, I will just call it Polestar. Polestar, right? Polestar. I will say full. So what I'm putting here, you know what I'm putting here? Let me even show you. There is no, I have the solution elsewhere here. So I will just come and copy and put it there fully. I'll come and copy and put it there fully. I'm not going to resolve it again. So this is the solution. You can see the full solution here. This is the full solution. I have it. So, but the step, the arrangement of the working norm is slightly different. How will it differ? For instance, if you look at our working 6 there. Our working 6. Our working 6. But just look at it. The arrangement of the solution may differ. But so what I will do is, and I will paste it here. I will paste it here. Oh, yes. So that is the solution that I've just pasted there. That is the solution I've just pasted there. So if you are looking for it, but this one, I won't do it beyond this one. I won't do it beyond, but it's the same thing. Check it, it's the same thing. Like this note, I didn't insert it here. I did not insert it here because they didn't have, nobody asked the question the day I was doing it. I hope that is clear to you. And this one too, we stop the MCQ, we stop our working at question 7. I will paste the other one there. I will paste the other one there. So any question, any query before we go, so that I won't take too much of your time. Thank you very much. Any question?
You have taken so much of our time already.
Yes, I've taken
But
it. We agreed together.
No why.
Thank you very much, sir.
Thank you very much. Thank you. I wish you success in your exams.
Thank you.
If you have done the mock, they said they would debrief the mock during the week, in the evening, during the week. Oh, sorry. There is something I want to bring to your attention. There is something, and this one is important too. This thing is important. I want you to look at study test. This study test, control find, conceptual framework, conceptual. Did you say conceptual framework? Page 43, page 52, regulatory framework. Specialized not-for-profit entity, page 52, 43, 52, 56. Have you been taught conceptual framework? The answer is no. Ladies and gentlemen, have you been taught conceptual framework? The answer is no. Hello, can you hear me? You are not answering.
Yeah,
Can hear you.
hear you. We're just waiting for it to
We
finish up.
haven't.
It is there in your, it will come out too. Apology to say that it will come out in the exam. Even if it's only one question under the MCQ, section A or B, it will come out. So this is a conceptual framework. Unfortunately, time did not permit us to do it. Maybe because it wasn't in slide. We were supposed to record it, but it's not in slide. That is why. The conceptual framework, advantages and disadvantages, they are all here. Generally accepted accounting practice, what it means is here. ISB conceptual framework, the various chapters you have there, the introduction is here. The status, the scope, chapter 1 to 8, they are all here. Objective of general purpose financial reporting is there. Accrual basis, what it means. Purpose of conceptual framework is there. The chapter B, qualitative characteristics, especially this area. Qualitative characteristics is divided into two, fundamental and enhancing. Fundamental has two, relevance and faithful presentation. They are there. And the enhancing qualitative characteristics, they are all there. Enhancing, these are the enhancing where you have comparability, verifiability, what it means, timeliness, understandability. The third one, financial statement and the reporting entity. Which entity should prepare financial statement? The chapter D, the element of financial statement, which break it down into asset, liabilities, equity, the definition, income and expenses. Asset, liability, equity appears in the statement of performance, which is statement of financial position. Statement of P or L and OCI, income and expenses. You can see each one of them being defined here. And after that, then you will see that recognition and the recognition, criteria for recognition, criteria for the recognition. They are all here. Measurement, the meaning of measurement. Measurement is about what value something should be recorded. How assets should be measured, how liabilities, the various measurement bases, current values, fair values, value in use, current cost, they are all here. Presentation and disclosures. Concept of capital and capital maintenance, they are all here. Financial capital maintenance, fiscal capital maintenance, they are all here. After that, you see the regulatory framework. Question may come in question 2 or 3 there. And here, after that, we have a multiple choice question in the study test. The reason it's been difficult. Okay, specialized not-for-profit, you have it there. After that, you have about 17 questions. 17 questions. If you want, I can send you the solution to these 17 questions. The unfortunate thing is that it wasn't taught in the class. Please create time to read it through. Oh, they are 15, not 17. I just feel like I should mention that even though I've taken your time. I don't know if you have any question, anything to ask on that. Or you may see 1 or 2 questions under section A and B on it, on those 3 areas. I just feel I should mention to you. If you read, if there is anything you want to ask, please feel free to send me a message.
Thank you. Well,
Thank
Mr.
you
Jami,
very much.
Please go ahead to send the answers.
The answer.
Yes, please.
Okay, I should send the answer to that MCQ
To the WhatsApp
question.
group. No,
The
maybe
framework,
Yes.
everything.
Okay, I will send the question cuts across the 3 areas: the conceptual framework, the regulatory framework, and the not-for-profit entities. These 15 questions cuts across. I will send you the solution as well. I will send you the solution.
Personal request. Just help me send the study notes too.
Oh, study note, you don't have it, or you dislike it. You've not been liking it.
Thank you.
Now
Mr.
you have to
Junior.
like it because of this. Okay, thank you very much. Thank you.
Bye-bye.
Thank you, sir.
I will send you the exam.
Thank you, sir.
Thank you. I wish all of you success. Thank you.
Amen. Bye.